Welcome back. Still flat for the markets, holding above that 5,300 mark. Mid-caps as well not doing too much. That is some news which is pertinent for most of these retail players. No decision yet on modifying local sourcing rules. Most of the people like an IKEA consider them a little more stringent, and they wanted some relaxation on that. Commerce Minister saying, as of now at least, no decision has been made on relaxing them. Pantaloon, Shoppers Stop are moving on big volumes for now. They've got 6 proposals for up to 51% FDI in single brand retail. The stocks reacted initially, but then they have come off a bit because as of now no decision has been made on relaxing the sourcing norms on that. Apart from that, it's a couple of the other stocks like Educom which is under pressure. They will come out with their numbers today. There have been several short positions which have been built up over there. OI has gone up by about 15%. And Educomp is under pressure, and Sugar per se is seeing a bit of profit taking after the recent run-up. But other than that, things are very quiet. So let's turn our attention to the personal finance segment. Hemant Rustagi of Wiseinvest Advisors is our guest for the day, and we've got Ankur Khandelwal who calls in from Tirupur in Tamil Nadu. Hi, Ankur.
Hi, ma'am.
Hi. Good afternoon. Can you tell us your question?
Yeah, madam, I have some goals for my financial planning. If you can help me.
Yes.
Yeah, 20,000 maximum per month right now I can invest. Okay, so my goals, 4 goals I have. I need around 5 lakh rupees in next 3 years. And for next 20 years for my child education I need 30 lakhs.
Okay.
Okay, then 35 lakhs for definitely for child marriage, and then 1 crore for retirement after 30 years. I am right now 30 years of age.
Okay. Do you have current investments, and could you tell us, in which equity funds or debt do they stand, and what the consolidated investments you have?
Madam, right now I have around 5 lakh investment varies to stock market and mutual fund. Mutual fund I have around 1,80,000 right now.
Okay.
And fixed income instrument bonds that are there. But, for these 20,000 monthly I can invest in various mutual fund SIPs and all. If you suggest me some better option.
Hemant, how would you advise him investing this 20,000 per month?
Well, I think clearly here, he's taken the right steps basically to begin with. For example, he has defined his goal, and he knows exactly how much is the time horizon for each of his goals, and also he has set some targets, which is the right way. First step I would say to start financial planning. If we turn our attention to his short-term goal, which is say 3 years away, obviously the time horizon is not long enough for him to really make this portfolio very aggressive. In fact, I would also say that the portfolio for each of the goals has to be separate. Ankur, don't make a mistake of having one combined portfolio, because as you yourself mentioned, time horizon for each of these goals is different. So try and make individual portfolio for each of these goals, so exactly, you can keep track of it, and you will know exactly in which direction your portfolio is going. So coming back to this 3-year goal, because you don't have long enough time horizon, you need to really focus on an option which is not very aggressive. At best, you can look at some debt-oriented hybrid funds. Typically in this category you have this monthly income plans. You can opt for growth option of this or asset allocation plan. These fund MIPs typically invest around 80 to 85% in debt, and the rest is invested in equity. Some of the funds that you can consider here are Reliance MIP or DSP BlackRock MIP. And in the asset allocation space, you can consider IDFC asset allocation fund. For your long-term goals, clearly your focus has to be on beating inflation and earn a positive real rate of return, which is gross return minus inflation. There, I think your focus has to be on equity funds. You already have some of the equity funds in the portfolio. In fact, I think the information that you've given, you have around 5 ELSs and 4 open-ended funds. Considering your current investment, I think you have far too many funds. You need to reduce the number of funds. And remember that, most likely, if DTC is implemented from 1st April next year, this ELSS scheme will cease to exist. So wherever you completed 3 years in those ELSS funds, try and exit from there and reinvest that money in some of the existing funds. In your existing portfolio, I think you can retain HDFC Top 200. You can also retain SBI Magnum Emerging Business Fund, And the other two funds that you have, Reliance Growth and Reliance Natural Resources, I would say opt for a fund like Reliance Top 200. I think as a combination that will be good. And because you have to invest some more money for your other goals, maybe you can add one or two funds, and that should suffice for your portfolio.
All right, that was an exhaustive answer for you. Thanks a lot for joining us. Well, Hemant, you need to stay on with us. We have more viewers lined up with their questions. We will take a quick break and come back with more questions. Welcome back. We have been speaking to our personal finance expert and getting some questions answered. Our next caller is from Pune. Amar Sapate joins us. Go ahead, Amar. Your question.
Right now, sir, I am interested to increase my investment 4,000 per month, sir.
Okay.
Right now, investing 6,000 per month.
Sorry, 1 minute. You are doing 6,000 per month and you want to increase it by another 4,000 rupees, right?
Yes.
Okay. And how long are you ready to keep your money? What is your goal?
15 years.
Okay. That's good. You have current investments already in a few mutual funds, right?
Yes.
Reliance Gold Savings, HDFC Equity, HDFC Top 200, ICICI Prudential Dynamic Plan, Reliance Growth, Sundaram Select, that's quite a bit. Canada Robeco Equity Tax Saver and HDFC Tax Saver, ICICI Tax Saver, Sundaram Tax Saver, that's quite a bit. All right, go ahead, Hemant, what would you want him to do?
First of all, I would like to say that, for a time horizon of 15 years, clearly he needs to look at, well-diversified equity fund, which for his existing investment of 6,000 is already doing that. But I think for an investment of 6,000, he has far too many funds. There are almost like 10 funds in the portfolio. I think this is clearly a case of over-diversification. So I believe that this is the time that he should try and consolidate his portfolio. Because if he consolidates that, not only he can improve his performance in the portfolio, and also the portfolio become more manageable. There are 6 open-ended funds, that's 4, ELSS. Like I mentioned earlier, wherever he's completing 3 years in the ELSS, he should exit from that and reinvest that money in some of the existing funds there. And in the open-ended category, I would say that he needs to make maybe a couple of changes. Some of the good fund that he has, he can continue investing in that. The gold fund is all right, HDFC Equity, HDFC Top 200. Those funds he can definitely continue. But a couple of funds like Reliance Growth and Sundaram Mid Cap, where I feel that he can exit from there, and if at all he has to look at one mid cap fund in that category, he can look at Reliance Equity Opportunity. So over a period of time, he should consolidate his portfolio and reduce the number of funds. And for the fresh investment that he wants to make of 4,000, he should be adding it to some of the existing fund. He can add to HDFC Top 200, which is primarily a large cap fund. And as I mentioned about exiting from 2 funds and adding Reliance Equity Opportunity, he can invest 2,000 rupees in that. So 2,000 in HDFC Top 200 and 2,000 in Reliance Equity Opportunity. I think that will create the right balance for him, and as I mentioned earlier, it will make his portfolio more manageable.
Okay. Amar, I hope you got that. You've got too many what are called ELSS schemes, all those tax saver schemes. If you have finished 3 years, the expert advises that you wind up these funds. And then he has mentioned the funds in which you can put extra money. The other point which perhaps Hemant would have liked to mention, but we are running short on time, you don't have any insurance. You may perhaps want to take some kind of a term insurance plan which at least protects your dependent. You have one dependent, so it would be a good idea perhaps to put a little bit of money on your term insurance plan. Okay, that's the word for Amar from Pune. And those of you who have personal finance questions, do write to us. Send us an SMS typing YM followed by a space and your question. Send it to 51818. Alternatively, you can also email your questions to yourmoney@network18online.com. Hemant Rustagi, thanks a lot for joining us. We need to take a break. We'll be back.